The pressure has never been greater on the C-suite.
So we had a shake-up in L'Oreal, Coca Cola's bottlers, Diageo PLC.
Patience with leaders run thin.
The capacity of a leader to see or read the tea leaves very early on is very important.
It's excruciatingly painful in a demand contracting environment to generate growth.
That moat that all these legacy FMCG companies had is now truly shaken up.
Valuations are sky high. Now, earnings growth has to justify those high multiples. You definitively need CEOs that can hold their nerve.
If you are not an innovation machine, you are going to perish.
Shorter tenures are here to stay. They're here to stay globally. They're here to stay locally. I think it's here to stay.
It's been quite a fortnight with the corner room finding itself in the corner. If it was HUL, L'Oreal, Coke bottler HCCB and Arvind Fashions here, globally it was Diageo, Kenvue and WPP Group, all of which announced sudden shakeups in their C-suites. In times of demand contraction, ruthless markets, tariff uncertainties, and local disruptions, the CEO seems to be the fall guy and the legacy playbook outdated. Clearly, there are a whole lot of new boxes that need to be ticked for the prized CEO job. But can change fix waning demand? And are shorter tenures the new normal? It's Tuesday, July 22nd. I'm your host Ratna Bhushan from the Economic Times, and today we're decoding why it's a lot more lonely at the top. This is the Morning Brief. Joining me today are my colleague, co-host and ET's associate editor Arijit Barman and Vibhav Dhawan, partner at global C-suite search firm Positive Moves Consulting. Bringing in Arijit first. As he wrote in yet another brilliant edit page column on Friday, it's the season of pink slips and abrupt changes, suggesting a growing impatience within boardrooms. Good morning, Arijit. Always great to have you on the Morning Brief.
Thanks, Ratna. Always a pleasure.
So that was a brilliant edit. The season of pink slips. I love the way you started it. And obviously, couldn't have had this episode without you. So Arijit, it's been quite a week, right? Tell me, what is ailing consumer companies? Why all this C-suite churn suddenly?
Honestly, when the news started coming in, the first was, of course, the big one was the HUL shakeup. It was obviously a shocker because this is a company where people come and retire. It's really struck you that what's happening. And then when you step back, and then there was a quick spate of announcements, actually, you and Sagar, our colleague, did a story which talked about this trend. So we had a shake-up in L'Oreal. We saw Coca Cola's bottlers shaking things up. In America, Diageo PLC, that's seen its CEO change recently. Again, a 2-year stint, much like Rohit Jawa of HUL in India. We had Kenvue, which is basically the makers of Neutrogena, Listerine, Band-Aid. This company itself was spun out of J&J 2 years ago. That's also seen a CEO shakeup, not just a CEO shakeup. It's also now started a brand review, and very soon it will probably sell many of its brands which it thinks are non-core. Now, why is all this happening suddenly? Now, I'm just thinking, and I would love to get your point of view, I think 3 or 4 things which are happening together, which is what is creating so much of headwinds for consumer or FMCG companies. Number one, I think the China story, or the attraction or the growth that the Chinese consumers, were providing, that's tapered. We've seen brands after brands focus on China. The China consumption story far bigger than the India consumption story. But China has been slowing down. So that's, I think, been one big end of a super cycle. Number 2, I think COVID which had led to a spurt in demand. And we saw companies like HUL, Nestle, everyone enjoy that volume growth, sales growth. Now that COVID-led growth is also coming to an end. That super cycle is also ending. So that's point number 2. And 3, what has happened over the last few years, and let's now hit, I would say, a crescendo of sorts, which is all these companies grew their heft because of their distribution and sales muscles. That's got disrupted first by modern retail and then at a faster clip by quick commerce, right? That has upended the game. That moat that all these legacy FMCG companies had is now truly shaken up. What was the other big core strength that these companies had, which was advertising and marketing muscle? Now, you can use that to buy large advertising space or spots if the media is fragmented, which it was certainly in India, and if the channels of communication were limited. You had television, you had newspapers. Then came the social media revolution. So on one hand, social media, and the other, media got consolidated. So now, who is HUL or a Diageo or a Nestle negotiating with? No longer a small regional player. They're negotiating with a Reliance, which is a media giant, or Google, Meta. They control social media and they control the advertising market. So therefore, the influence, the heft has totally gone. So all these 3 mega super cycles coming to an end has led to unprecedented headwinds for FMCG companies across the board. We saw it happen sooner in US, where social media and all this is far more developed. It's now reached the Indian shores, and we are seeing this churn in India as well.
Right. That was a very, very comprehensive sort of, explanation. So is the legacy playbook outdated then? Because like you said, a lot of these companies, there's been so much disruption on so many fronts. So the CEO of the past, they can no longer, just bank on their legacies. Is there disruption playing out even at the CEO level?
Yes, it's happening because all this while, all these global corporations grew in a globalized environment because the whole mantra was expand in terms of geographies, expand in terms of categories. Now, the globalized world has given way to regionalism, to regional blocks. Trade barriers are coming in. The nature of risks, business risks, they've become predominantly exogenous. You can't control what President Trump is going to say day after tomorrow. And that will have an impact even in markets like India or China, right? And because of these disruptions, we are also seeing shareholder activism. Look at Nestle, look at HUL, look at the biggest case study, which is Kraft Heinz. 12 years ago, when Kraft and Heinz came together, people hailed this as a masterstroke of Warren Buffett and private equity group 3G. What did they do? They brought 2 very different cultures together, cut costs, cut manpower, cut the portfolio, tremendous amount of financial engineering. Did that work? No, it didn't. 12 years later, you have hedge funds, our activist shareholders in the companies saying, hey, you can be Warren Buffett, you can be the Oracle of Omaha, but I'm not getting my shareholder returns. Same with Unilever. Shareholder return is extremely poor, which is why you've had global activists like Nelson Peltz, who's come into the stock, and he's saying, break up Unilever. Unilever tried to buy GSK globally. It boomeranged on them. It bought GSK's portfolio in India for almost 6.5 billion. I don't think it worked. So shareholders are asking questions that, hey guys, we want return. What worked 10 years ago, 5 years ago will not work because now consumers have a far bigger number of or more options. Look at these DTC brands that even now legacy companies are trying to buy, minimalist. whether it's ITC or Tata's buying Soulful or protein bars, companies that make protein bars. If you are not an innovation machine, you are going to perish. And that is exactly what is happening around the world.
But Arijit, you interact with so many leaders across blue chip companies. What's been the chatter in boardrooms over the past 1 week to 10 days since the Unilever saga unfolded, and then back to back we saw other leadership churn as well. So what's playing out in the blue chip, boardrooms?
No, but I mean, everyone was shocked because nobody expected Rohit Jawa to leave so early. When it happened, I don't think anybody was expecting it would happen so soon. And that too with someone who is an insider, right? Unilever never treated its insiders like this. One way to look at it is it's very good that Unilever or someone in Unilever or at HUL, which is the local subsidiary, is quickly realizing that, hey, this formula isn't working. We need to change. We need to change fast. Mind you, what is happening in the consumer industry happened in the large industrial groups few years back. What I'm talking about is GE, Siemens, Emerson Electric, or even other companies, for example, Honeywell. They also split into number of smaller splinter companies. Their CEOs also were reshuffled. And these were institutions in America. Or, even in many companies such as an Holcim, such as an AkzoNobel, they've decided to exit India, which were high growth markets, because they're realizing that in India, it's hyper competitive, low margins, hyper competition that puts margins even more under pressure. So therefore, they can't compete with the local players. They don't have that kind of influence. So therefore, they're exiting. Yes, when the news breaks, there is a lot of surprise. There's a lot of, oh, wow, such a thing can happen, that kind of eye-popping reactions. But then when things cool down, if one starts a dispassionate evaluation, they say, well, the world's changing. Corporate boardrooms also need to change, adapt, and it's good that change is happening. Change is good.
So what are the non-negotiable skills that leaders of today need?
The power or the capacity of a leader to see or read the tea leaves very early on is very important, and take calls accordingly. If something is not working, it may have worked 10 years ago, but it's not working now because people's choices, people's preferences have changed. Take the hard call and decide. In the West, in developed markets, these are largely board-run companies. They have very detailed, exhaustive succession planning that goes on. Like if a CEO earlier would have a 10-year tenure, then from the fourth year, it's the responsibility of the CEO to identify, or the board, or the chairman of the board, to identify the next set of potential CEOs and accordingly, train them, groom them to take up bigger responsibilities. That's what Levers, Nestle, all these companies were known for. Now, as I said, succession planning, being fast and being nimble, and stakeholder management. That's the other thing that's becoming more and more and more important, because shareholders want answer and they want answer fast.
So Arijit, it is a churn in the last 1 week to 10 days. All of it has been in the case of multinationals. And in local companies, we've not seen this kind of churn.
Yeah.
But, the slowdown is across categories and across, whether it's urban or city. So why this difference?
Why this difference is because fundamentally there is a very big difference between Indian companies and global companies. Indian companies are still family run. There is a concept of a promoter, which is not the case when it comes to these global companies. They had families, founding families. Nestle had, Johnson & Johnson had, Coca Cola had, but now they are all board-run companies. Having said that, Indian companies too are seeing a different kind of churn, especially in manufacturing, which is why we are going to see this kind of shuffle even in manufacturing in India, which is the Gen Next very few of them are saying we're going to continue with the family business. I at least know 3 cases where billion-dollar companies, the Gen Next, finds investing in artisanal vodka, gin, space tech more interesting than investing or working in their traditional businesses of auto components or engineering, manufacturing, or even in one case, medical appliances. So that churn is also happening. So sooner than later, we're going to see faster C-suite shuffle even in Indian companies or family-led companies and even in non-consumer companies. Remember, even companies like Marico, I won't be surprised if, and maybe I'm spilling the beans, there is a succession story play out in Marico sooner than later.
Okay, so I look forward to that breaking story from you soon.
Let's see. Keeping fingers crossed.
Next, I have Vibhav, who has personally handpicked some of the choicest CEOs and CXOs in India and globally. He's also an investor in data and fintech startups such as Dashfin and Rapido. Good morning, Vibhav. Welcome to the Morning Brief.
Good morning, Ratna.
So tell me, have you seen so much churn in boardrooms with so much frequency?
Look, to be honest, we're living through very fascinating times in general, right? So, globally and locally, has one seen churn at this pace? The answer is no. And I think it's both a global and a local phenomena.
What is it that's ailing C-suite boardroom suddenly?
There are macro circumstances and micro. If we go to the macro for a second, globally, one is seeing patience with leaders run thin. But in general, accountability of outcomes has never been higher for CEOs and C suite. And in part, at times, shareholders, boards are making changes. Now, necessarily, does change lead to a differentiated outcome and problems being fixed? Probably not. Sometimes change is because they need a fall guy and you make the change. But in general, why this is happening globally and locally is the demand scenario is turned. We are living in times of demand contraction. Uh, what was taken for granted was domestically and to a certain extent globally, there is going to be a certain amount of growth that is going to come. There was predictability around it. Now that growth has gone. It's excruciatingly painful in a demand contracting environment to generate growth. And so you definitively need CEOs that can hold their nerve in times of volatility of tariffs, supply side inflation, demand contraction, omni-channel disruption, and yet show the path forward and deliver results. So I guess, the pressure has never been greater on the C-suite.
Yes, absolutely. You've really, connected the dots very well. So, this leadership churn, is it happening only in certain sectors? Because the last 10 days have shown up examples of consumer and retail, but there are more difficult sectors as well. There's real estate, there's telecom, there's auto. They're also going through their, woes. So is this leadership churn across C-suites? Or if not, do you expect it to happen? Do you expect it to spread?
Look, if the demand scenario continues to be intense, expect action and churn across sectors. I don't think demand contraction is only on FMCG, for example. Also, understand family owned businesses in India and globally, they tend to value loyalty and go more long term and provide more stability to their leadership vis-a-vis multinational corporations that would normally make a change every 3 to 5 years. So yes, in some of the other sectors, you have the big Indian businesses and established tenured CEOs who sometimes are going into the 60s and their careers are extending. But if the demand scenario continues to be intense, I think those businesses will also need to make changes.
Correct. So, Vibhav, my next question is that, you've talked about the demand overhang, markets continue to be ruthless, consumption revival remains tentative. Is it fair then that the CEO takes the bullet all the time?
No, it isn't. I think if you look at the fundamental problem is valuations are sky high. Now, earnings growth has to justify those high multiples, and earnings growth comes with top line growth and bottom line growth, which has to be delivered. Now, when it is not delivered, the impact on market cap is very significant. The diligence level needed in assessing performance of a CEO and their teams, and also in making CEO appointments, unfortunately, now needs a hell of a lot more rigor. Some of the recent departures that one has seen, it was evident to me in the past that, look, is the intensity of the process of appointing people, has that been done? Because if you were to go and piece evidence of a CEO's appointment before appointing them, some of these short stints might not occur, right? So my point is, there are a lot of CEOs who believe being in an organization, being highly tenured will get them the top job. But unfortunately, are they the best candidate then? Or are they survivors? Will they be able to deliver the outcomes? Or do you go for that high potential talent that you have to probably give the CEO role earlier and back their consistent delivered results and their potential. If you analyze and see CEO changes over the last 10 years, you could see Airtel and today where Airtel is, and tie that success down to their CEO. You could see Britannia and where Britannia is, and between two CEO changes in the past, you could go to Marico, Godrej, Tata, and hell of a lot of others, and just see how does the change of a CEO make a significant impact. So I think just the diligence that needs to be done while making appointments needs to be very rigorous.
What are the new boxes that need to be ticked for CEO jobs now? Like, what are the new qualities in leaders that large companies are looking for, which was not the case, say, 2 years ago?
So I think the biggest challenge I see today is we need CEOs who can show the path and decode growth. What do I really need to do to get results that are not coming is very critical. The second is, Ratna, holding your nerve has become very important today. You see, tariffs will get announced and they will come at you like a ton, and you will just not know what the impact of all of that is. But then tariffs will be put on hold, right? So the question is, can you react immediately? Absolutely not, because you don't even know if these factors. India can go to war, but that war could end in 4 days or 44 days or 444 days, right? Now, imagine if you reacted thinking it's going to be 444 days and taken some steps in the first 44 days, and suddenly this is over next morning. So the point is, holding your nerve is very critical today. Believing that sometimes it's best for temporarily to bury your head in the sand and stick to your plan, is the best strategy.
So, Vibhav, I want to know from you, Indian boardrooms seem to be taking a leaf out of global peers. We know what happened with Unilever, Starbucks, Nestle from last year. So, my question to you is, are shorter tenures at the top and sudden exits the new normal?
So I think, look, shorter tenures are here to stay. They're here to stay globally. They're here to stay locally. I don't think just making a change solves anything. Like I said, you really need to look for those purple unicorns that can decode growth, hold their nerve, inspire people internally, and just yet deliver. But I think it's here to stay.
My final question, Vibhav, is that, the changes we've seen are almost all of them are legacy companies. Even Arvind Fashions announced a change, right? And WPP also announced a global change. So all these are legacy companies. So are legacy companies going the startup culture way? Because it is in startups that we see, these abrupt, sudden changes and short tenures. So is that something that, that's where legacy companies are moving towards?
No, I think we're talking relative. We're talking one extreme and then the other extreme. I think, yes, the older, more entrenched incumbents are seeing churn, will continue to see more churn, more intensity. Will it go to the startup world? No, I think the startup world has gone crazy. Right, it's just going berserk and crazy in part with people changes now, and that's reflective then in their bottom lines, right, which in most cases are slim or negligible. And I think they'll have to do the right things, right, like go invest in R&D, right, go invest in manufacturing, right, build those long term value creators to differentiate rather than just raise capital and do some limited disruption and still command serious valuations with negligible bottom lines. That has to change.
The leadership churn isn't just about new names. The way it's going, it appears to be about bringing in new mindsets and swiftly at that. Global experiences, local execution, tech driven strategies, data fixation. The mix needs all this and a lot more. As boardrooms undergo not just leadership changes, but foundational shakeups to drive elusive growth and shareholder value, bridging the legacy playbook with digital first mindsets may be one answer boardrooms are searching for. That's all for today. We're signing off on that note and hope you enjoyed this episode. You've been listening to The Morning Brief, and I'm your host, Ratna Bhushan. This episode was produced by Anirban Chaudhary. Sound designer, Rajas Naik. The Morning Brief drops every Tuesday, Thursday, and Friday. You can listen to our podcast on all major podcast streaming platforms. Thank you for listening and have a nice day ahead.